Hello and welcome. It is the 12th day of September 2019, and this will be a video just that for the gold to silver ratio. I have found a way to get data on TradingView going back to 1975 up until current. And back then, for a short period of time, it started off at around 40, went down to about 17, and back up to 40. I was thinking for a while. I was going to say, to my knowledge, I don't know if it's ever been much above that number before in the past, but I'm pretty sure it has. I think the highest it was, and I'm thinking, and this is an educated guess, most certainly, that the ratio of gold to silver was as high as 80 back in 1932. Silver's low was 25 cents, but gold was $20 as well. And that would be about 80 to 1. Now, it's unfortunate I don't have data even before this on the TradingView, but I do have data from the gold to silver ratio from the LBMA close from 1968 to the time they finished. Well, not really to the time they finished, but for a good period of time until the other data become very good when they had the open high-low close. So therefore, let's take a look at the gold to silver ratio from 1968 through that of the end of 1975 via that of my spreadsheet. And via such, the lowest it got to is about the 15 at the start, piercing below 15 in here. And from 1968, 69, staying at around 15, 16, well, really 16, 17 to 1. It would rally up to 25 on day number 400, but 250 trading days in a year, approximately. And then back down in here. But it really made a move up to about 47. Had a very large correction, or its biggest correction for this time frame anyway. This was pretty good, but not as big. And I mean, I know this is a linear scale, which means the size is probably about the same here and here. But this was very long too. But the last one anyway, going from 47 and a half down to about 26. So I suppose that would have meant that the price action would have went from, well, the bottom here, like 15, up to 47, down to, what was it, 26, something like that. Let me just verify. And really, that's how bad my short-term memory can be at times. Yeah, 26. And then it would have had to come back down, something like that. Anyway, so the market would have had to move up higher, come back down, and stay mainly in a range between, well, 20, 25, we'll call it now. And I don't know what the intra-move moves were. These were daily closes that I showed, and I don't know how well this would have been either. But regardless of the fact, it was in this area. A range of about 25 and we'll call it 45. So therefore, as we move on to the rest of this chart, as we move into, well, obviously in here we move into the later times, we got up to 100. As it ended up breaking it, that's 45 or so number in 1985. And again, I find it interesting because from my memory, and I haven't remember even researching this on, I'm trying to remember what site it was. It was one of those sites where you get all the, maybe it might have been Kitco, where they have yearly averages, it even was too, it might have been. But it said in 1932, I think it was pretty much a quarter. And so, anyways, if that was the case, then it would have been into this level. And pretty much gold and silver was always the same price at the same time. It was pretty much your money. So I don't know if that's in that, like, well, silver, your dimes, your quarters, your dollars were made with 80% silver to 90% silver in Canada and 90% silver, or 92% or 80% silver in Canada and 90% in the United States. So it was your money basically. But the ratio got back up to this point in here. And now we're in a day and age of what people call paper trading. Well, paper trading was way back when. This is what I call digital trading with the computers and stuff like that, electronically. And I mean, it was really nothing at this stage in '92, but computers were a big deal back then. And there were some pretty good processors that could do some things at that time frame. But with that, throwing that part aside, as far as where the price goes, we had to come back to 42, which was interesting because that was that level of resistance that it had from before. So big, big. This is a big, big level, of course. In fact, I'm just going to delete all of that and put a line. I didn't want to do that. It's at least what I like about this. It is so fast to put indicators in. As to do it on here, at least to get the 18 hours on the trading view. Compare. No, I don't want to add symbol. There's an indicator on here somewhere. Indicators. So I want volume, and I use a front-weighted moving average of 18 periods. So I'm going to go to moving average, and it's weighted, and I want two of them for the lows and the highs. So I've clicked it twice. And now to format this, I'm going to go to settings in here. I'm going to change it to 18 periods, and I want one of them to be high and one of them to be low. And I like the color blue. It's the first color that I chose, actually, too. But it was like, okay, I got red and green candles. I mean, to me, it just seems like your next obvious choice, I would think. I don't know. That's what I thought. So I use the bottom end blue in here. And then I can put this one in for the low. Okay, anyway, back to where we want to go. So get the color first. And the input 18 and the low. Back in business. Okay, so we move some further ahead. So we put that line in near the 40. And that's where it's been. It supports it in 1998. That was that big failed breakout on silver. That'll be another video for today, but this is exclusively to that of the gold to silver ratio. And also, we have close to it in 2006. That was that big silver rally that came up. Again, we'll take a look at that. But that's when silver in 2006 got up to, what was it, 14? I think it was $14 it got up to. And then it pulled back. This was moved to 50. So if silver goes to extremely large places, how low is this going to go? I already know that this 40 number is a big, big area. But what I would suspect in a meetup towards that level would be one of those situations I've talked about a lot in my charts before. Okay, a spot I don't like as far as what I'm going to have to predict, but I'm going to be forced to as a large silver investor. What are we going to do here? Because if, for example, well, one of the things I've thought of mainly is if I really want to start trading this, turning silver into gold, this is the ideal place to start. Just don't do any of the gold or silver trading until we get there. And do a small allocation. This is what I'm planning on doing. Small allocation of silver into gold. If we get any of these lower high rallies in here, start flipping that back over. That's the plan there. And of course, to do this, you probably want to be as good at buying and selling as you possibly can to get the best for your buck kind of deal. That means, but for the most part, that's not that difficult. I don't think, because if it's going to come down to here, well, how is it going to do it? Well, probably because silver is going to kick ass. People have often said before, well, how are you going to sell it if it's worth so much? It should be the opposite. How are you going to sell it if it's worth so little? And I say that because when markets go up in major, major moves, aka when this was going into here, and any of the people who actually can remember back in here would probably say the same thing, that when it was on the rise, it was actually not the hardest thing to do to sell, because the reason it was on the rise was people were in flurries to buy it. And if people wanted to buy it, that drove the price up. So in a situation of coming back in here, oh, well, that probably is going to mean that silver is having phenomenally large moves, breaking major levels of resistance against the US fiat. And people are going to be wanting to get into the precious metals. In this time frame, one by one by one, by 20, by 100, by 1,000, by million, people learning about their local country's fiat currency, because pretty much every country is the same within central banking. And obviously, cryptos are going to be one of the things, but gold and silver are also going to be in there. And for a lot of people, both maybe, or some people rather. And in such, that's going to be people trying to buy. And now, if you're trying to buy on the, or try to buy and sell on the open market, that means you're trying to sell to, I'm not going to say your neighbor Jimmy, because you might not have met Jimmy before, and he's probably not your neighbor, but he may not live too many blocks from you either. But you meet up with people in your local community. People are on the flurry to buy. Silver's $280 or whatever the price might happen to be. $100, I don't know. But at those both of those levels, there's going to be people wanting to buy. So it's not going to be too hard to find your Jimmys and your Tommys and your Sammys and your Julies and your whatever. Just trying to go through random names. Yeah, yeah, I got 3 grand. I want to get. Can you sell me some silver for 3 grand? And maybe if you want, you could try to work out the best deal. And of course, for me, the best I could do is barely beat what I know you can get it somewhere else. That would be it. Obviously, honesty is always going to be definitely something you're going to want to be able to want to be at. But for me, it's all about, again, I know it's just going to be easy to sell at this point, I figure. So then getting below that, and the same thing on the selling and all that below. In fact, it may be even easier if we go to these lower levels. We get to the next key level, which to me is going to be between 20. That's where we get to 20. The whole historic ratio, people talking at 16, 17. And we seen at the start of this, as I was talking about it with, this chart in here, how even when the London gold pool ended and then start really trading, really for the first time in a market conditions, how it's spent at least the first year trading in that ratio. And when you get to 20, people will be talking about that 16 number, which means it's a time to turn silver more aggressively than here into silver, more aggressively. And turn silver into gold, rather, yeah. And then I would be looking to flip it at around 40, if it gets there. I mean, these big numbers just happen to always come back and forth. I don't know what it is. As a trader myself, I would be actively seeing it if it were to happen. It goes to this area, then it gets to 32, 33. That's at that stage where, like, okay, now we're getting there. Do I ease myself into turning silver into gold? And at this case, it's probably a combination of two things: silver going down and gold going up. How many people don't believe that silver rally that just occurred and they want to get out of it? I don't know on that. And you know what? It might just happen to work that I have to sell my gold for cash and go to one of the dealers to buy my silver. And maybe the same thing with selling silver. Probably that would be the case where if I were to be, the buying will probably come, unless I can find a good someone who wants to sell, of course. But yeah, that's that level. Let me remove all those lines and go to where we want to go to next. Because breaking down below that, like, 15-ish area, I really got 2 levels after that. Really 1, but it's just too big of a gap from that level. Somewhere approximately around here. Not 0.8. 1.0. The thing is, though, and this is for me, this is how I'm looking at it. Going from about 17 to 1 is about a 17 times move. It is a 17 times move. 17 and a half, 20 times move, depending on what number you're talking about. If I'm going to start doing level 2, turning silver into gold, more aggressively than I did before at 40, And 40 was just a move of like double, 2.4x. Then I'm not going to wait to go to 1. Hence why I'd probably go really small as far as a trade at the 40 number. And just ease myself back in a bit heavier when we reach the historic number. But I think what I want to do is wait for a little gap range, which is somewhere around here. Once we hit around 7, and of course, this is the if case scenario. This is like prepping, if you will, preparing for the situation if this happens, which means I want to set up my investments moving into it to lead into this. So at 8, 7, now we start aggressive flipping into gold. And if the situation does exist where the ratio gets anywhere in this circle area, now I'm left with what they call in the poker community as a difficult decision. Because I'm not going to own too much silver at this stage, at least compared to gold. At least, and if I want to sell silver again, how much do I want to leave back? Because now I go to the old investing school of thought where if you keep on selling something, at one point when it goes up, or whatever, no, yeah, it goes up for value. I guess in the gold to silver ratio on the inverted chart would be going way higher. But when it goes up so much, when do you start laying out, like do you sell everything? How much do you leave back? That's the type of questions that I'd be really into. And I feel that this is going to happen. And as an investor, the situation for silver, the reasons why, and the fundamentals to it, and how the best trades work out, to me is the following. In here, I expect there to be a very, very heavy level of wanting to sell your silver that's just to mint it. It's just got to mint it. We got to build this. We got to build that. This technology is amazing. We're taking your silver. I don't care if you got this Eagle or if you got this generic Sunshine Mint. I don't care if it's a key date or if it's a one in whatever press or if it's a proof coin. I'm putting it in my machine and I'm liquidizing this baby. We're gonna make small silver barbels out of this when we're all said and done. Okay, now I'm gonna be wanting to give my Sunshine Mints then, I suppose, at these stages, and that's what my plan is. Sunshine Mints, all the generics, will be sold at this point. And maybe when I get my whatever it is from the melters for money, I'll turn it into gold, and maybe gold's money, and that job is done. But that would be the plan. So the before and after, how does that mean? What does that mean? Well, the after is simple. What I would leave back is a lot of my very high-end coins, the proofs, and then this collector's coin that I just love so much and I just know is so valuable and stuff like that. Because I do believe when we move into years around this time frame, middle of this century, 2050, that those coins, and maybe even early as 2030s for that matter, but I'm still considering in here, that those coins value-wise could be so huge. You could be having 2, 3, 4, 5x value increases, meaning I could take this amazing 1 kilo coin that is like, well, maybe as an example, maybe one of those like the year of the horse, year of the dog, whatever. I could take one of those coins, and they might be worth more than a 100-ounce bar, and a kilo is 32 ounces. So thus, 3 times worth more in value. Maybe even a silver eagle or maple might be worth twice as much as a 1-ounce coin made that year, like a 2050 whatever kind of deal. That is would not be a surprise. So that's why I want to hold on to those nice coins. Now, in the meantime, selling at the 40, selling in here, and selling when at like 16, 20. Then that would mean I would probably want to find the best deals that I can. Maybe even look at the the extra value coins. Which ones do I think are going to go down? Which ones do I not think are going to go up? Or which ones, for the fact, do I like less than the others kind of deal? Sell a little bit of those because I'm able to maybe get a good premium on those. Because that's one thing about those more expensive coins to think about. And the 1 kilo coins are not more expensive. It's just when you're buying a kilo, you can only pay so much of a premium, which is why I love them. But as far as like a lot of the 1 ounce coins, you might notice, oh my goodness, this coin is $4 more or $5 more, $7, in some cases even way higher than that, more than a regular 1 ounce or even a regular 1 ounce eagle or maple. But when you're paying that premium, understand that as you move in the future, you're going to want to sell, especially a coin like that, to something on like the open market to the best that you can. You realize in the future if silver maples are selling for $100, that, well, what's the premium market on this right now? I want to get whatever it is. If I can get 120, 130, whatever it works, that's what I'm going to work towards getting along the way. And by the way, I'm talking, I obviously hold and would, if anyone were to come to me, I would probably recommend to be holding the physical 999. Nothing wrong with constitutional, nothing wrong with sterling silver, nothing wrong with any parts of scrap, especially gold. I'd rather have the bullion over any of the other stuff, but the sterling stuff, there's so much of it. I mean, literal silverware, jewelry, there's so many different ways of having it, and even in coins as well. But the 90%, 80%, the sterling silver coins, they are fantastic as well. But what am I thinking? One of my keys into thinking, there's two levels on why I really don't like to buy any of that. Other than the fact I just don't shop around and look at wherever else where I could find scrap gold and silver cheap. I'm not into that type of business. But is if I'm going to be buying silver, I really find buying like old Canadians and the American silver dollars and quarters and such, I can't get it that cheap. Maybe I can get spot if I look around for the stuff in a bucket that's obviously, we'll call them dirty coins, and I'm just being literal, the fact that they're dirty, because you put your hands up, you play around with them in your hands for 4 minutes, if not 20 seconds. You look at your hands, they're like black and dark as anything, at least darker, with you can see the dirt on it. And that's just how it is with those, and that's fine because you're holding coins that have been held by probably hundreds and hundreds of people. And most of those people were a long, long time ago. And I guess maybe in the coin stores there'd be a bunch of newer people that were looking around in them as well. So that's just money that's being circulated. But I have a hard time getting them cheap. And for the most part, when I want those kinds, I want them shiny. I want them in good condition. I want the ones, whether they're circulated or not, I want them to be touched by as little as possible, and thus have good the MS collector's value towards them. But I do have a hard time getting those cheap, so I normally don't even look for them. I'm at the stage now where I'll just log on to like Silver Gold Bull, and they sell those coins, and they're expensive. I don't even consider it. So the cost right now is there. It's not that expensive to buy generic coins. Sunshine mints, those buffaloes or those generic eagles, we'll call them. You can get them oftentimes for even under 10% over the cost of silver, but not too much more. 12% more. It's not. I haven't seen what the premiums are lately. I haven't bought in a while now, actually. It's been several weeks, months. No, a couple maybe. And so then, the next one is the melting it down. If it gets to the stage where I talk about everyone needs to melt coins, I really think that they're going to prefer the 999s than they would over any of the 80, 90, or 92%. And in that case, I would want the 999. I'm going to probably get a better deal than I would on those ones on flipping it back. It might only be microscopic, as is the buying of them now, as it is anyway, the differential of buying the two. But it would work into definitely an advantage, of course, to have it for that purpose. Now, as far as scrap gold is concerned, I just don't see there ever being a time where they're going to really ever want to melt a bunch of it down. It always gets melted. It always gets changed into different forms here and there. But the house, as that cycle's being done now, wouldn't be a surprise. But the problem with gold is the amount of people that are investing and hoarding gold, percentage wise, and all that, does seem to increase. And in that, that would really reflect reasons why this ratio could have significant moves. Because for this to go to one, you have to consider the fact it has to this market as of now would have to lose 83 times its value to get there. And that is just a mind blowing change of value from one asset class to another for that to even happen. For it to go down to its historic ratio of under 20 to 1, we're now looking at about a 5 times change in value. A move like that is okay, yeah, okay, that's nothing uncommon. I've even seen better than that, which means that a break into the 10, 9, 8, which is a huge move going from 8, I mean, really going 83 to 9 to 1, that's going down 9 times, like 3 times. So 9 times 9 is 8, or 1 times 9 is 9, and 9 times 9 is 81. So you'd have two 9 times moves. Once to get to that 9 number, which would be an interesting situation if it got to single digits. And for a market to move 9 times, that is extreme in itself, but it becomes more realistic. So I could be in the situation where I'm preparing for the spot it goes to one, realizing that now and even then that may never even happen. But if it does, what do I do? It's just like if, for example, if you're preparing for like a hurricane or a tornado or an earthquake. Well, if you know it's not going to happen, then why would you prepare for it? Just something to think about as well. Thank you for tuning into this video. Hope you found it helpful. I look forward to any comments. Thanks for the thumbs up, even the thumbs down. And if you thumbs it down, please let me know why. That'd be one thing right there. But anyway, have yourself a great day. Bye bye.